Hello everyone, welcome back to Block and Key. Today is April 20th, 2019, and today I want to talk a little bit about the latest pump we've seen over the last few weeks into April and where we're probably going to be heading next throughout the rest of this year. I want to discuss gold and its relationship to Bitcoin, as well as central bank policy and why I see nothing but bright skies ahead in the long term for Bitcoin. I also want to talk a little bit about the Fed's policy going forward, what we can expect, and if the stock market is actually going to roll over. I still think we're going much, much higher, and I will give my case for that. So stay tuned. We'll be right back. See you in a minute. Block and Key. So in my last video, I discussed about the Golden Cross when I first got into Bitcoin heavily in 2015, and how a lot of this chart that we're looking at here now is very reminiscent of 2015. And I was discussing how I started to acquire down in here, and we were probably very close to a bottom. I think I recorded my video the end of February, just a few months ago, right around this area. And as you can see, we're above the 200 day, and we're about to now embark on our Golden Cross. Do I believe that there's higher gains to be achieved yet for Bitcoin? It's totally possible. I still stick to my argument that I believe in around May, June, we're going to start to see this roll over. And we'll probably come back down to test the 200 day at least, or the 200 weekly at least once again. Will we get to the lows of 3,100 as we did back here? It's possible. Are we going to 1,800? It's highly, highly improbable for several factors. One, it really hasn't happened before. Two, you have to obliterate some of these predictions by Tone Vase and others would obliterate what we've seen in the past with Bitcoin and the 200 weekly moving average. Also, we have the halving coming up in a year. Almost always, like clockwork, about a year leading up to the halving, the Bitcoin price begins to rise. Does that mean that we're going on a parabolic curve up here? It's possible. I highly doubt it. The market's starting to mature over time, so I still expect we'll probably roll over, come back down once we get back into around Q3. So we'll head up like this, we'll roll around, and then we'll probably head back up. It'll be a slow climb. End of the year, 8 to 10K US wouldn't surprise me. And in fact, if we did that, if we did roll over and come back down to test either the low or around the 200 weekly, I'd be very happy. It's just going to solidify my stance. Today I want to talk about an article that was posted on CCN not too long ago. The date here shows 17th of April, and it's how central banks, or this particular central banker, is saying that cryptocurrencies will never replace them, and he tells some of his arguments for that. So scrolling down here, this part talks about the state as the only savior. So it is a quote: "In markets, the state is the only possible last resort lender. When the banking system was saved, it wasn't crypto banks that were saved. Central banks intervened by issuing base currency, which was followed by non-conventional measures." Now, here's this argument that after the 2008 financial crisis, if we didn't allow this monetary experiment to continue, the world would have ended. We would have gone back to the Stone Age, and we would never have recovered. I don't believe that argument. It would have been painful, but it was well due. And it's due to this inflationary monetary policy by central banks, the boom and bust cycles that never end. And of course, the countless wars that go along with easy money, which we won't discuss here. But I like what this article had to say. The statement is likely to get Dianu, I'm not sure if that's how you pronounce his name, in trouble with crypto enthusiasts, as the unhindered printing of money is what spawned cryptocurrencies as we know them today. The central bank official also revealed that centralized institutions are yet to understand the importance of the deflationary approach cryptocurrencies such as Bitcoin have taken. This was demonstrated by his statement that the central bank's answer to cryptocurrencies is to issue a digital currency that can multiply. So there's been other articles. I didn't accumulate too many of them, but they probably will initiate their own e-coin. They'll have some sort of crypto-backed currency that issued by the state that they control, that's inflationary, and of course robs you of your purchasing power. Once we move to a cashless system of this nature, it's very dangerous because now they can freeze your accounts with ease. They'll know every single transaction, whether it's microtransaction, whatever you do, they will have access to knowing what you're doing with your money. We've seen censorship happen on Google, Facebook, Twitter. So as these silos, it won't even necessarily be with regards to money. Even if the state or certain actors deem you as a threat to their agenda, they can just, with a flick of a switch, turn off your money. Not a very good, bright future if this continues. Now, this article is from the Mises Institute, and it talks about more QE is most likely on the way. So prior to the massive equity semi-meltdown that happened in December of 2018, when the stock markets, especially in the US, were really starting to dip down, the whole talk of the Fed was several interest rates coming in 2019 to normalize rates. It's quite obvious, and I stated in my last video, that they're not going to normalize rates. They can't. If they do, the economy will implode. So now it seems to be they're not going to raise any interest rates whatsoever this year. And in fact, the chances are we're going to have rate reductions. This is from the Mises Institute, and the title is "The Fed Has Given Up, Get Ready for More QE." For those that don't know what QE means, that's quantitative easing. It's a nice way of saying printing money out of thin air. The Federal Reserve's Federal Open Market Committee on Wednesday voted unanimously to keep the federal funds rate unchanged. So this is from March, so last month. Overall, the FOMC signaled that it has made a dovish turn away from the promised normalization of monetary policy, which the Fed has promised will be implemented someday for a decade. Although the Fed began to slowly raise rates in late 2016, after nearly a decade of near zero rates, the target rate never returned to even 3%, and thus remains well below what would have been more normal rate of the sort seen prior to the 2008 financial crisis. And it goes on to say basically how things are working, but I really like how it pointed out with this monetary policy, what it does for inequality. So the rich and the poor, for working people that are paying income tax to the IRS or to any other central state authority, you're going to have a tough time keeping ahead of this curve. And talks about it here, rising inequality. When interest rates are ultra low, wealthy households with asset managers acting on their behalf can play the stock market to beat zero or even negative returns. We've shown in several recent blog posts how high the wealth inequality gap is and how desperate wealth sources help to make it so. However, even where low and moderate income households can get into the market, their investment advisors should not and often cannot chase yields. As a result, ultra-low rates mean negligible or even negative return. So for us at the bottom, or for working people, you don't get the same benefits that the rich at the top do. They're right at the spigot of the free, easy money. And I'm going to talk a little bit about where we are, not just my opinion, but some billionaires that, well, one in particular, who talks about this free money. Thus, ordinary people are faced with rising asset prices. That includes houses, cars, food. You look at the price of gasoline lately when you go to fill up your car, these things keep going up. Driven in part by the Fed's balance sheet purchases, while also finding themselves unable to save in a way that keeps up with inflation. Meanwhile, the wealthy reap the most benefits from Fed policy as they're able to more effectively engage in yield chasing. Ordinary people get the short end of the stick, from the Fed policy in other ways. Petro continues. Historically, pension funds and insurance companies have invested only in the safest assets. These are now in scarce supply, due in large part to quantitative easing and comparable programs by central banks around the world. Pension plans and life insurance companies increasingly have two terrible choices: to play it safe and become increasingly unable to honor benefit obligations, or to make big bets and hope for the best. Underfunded pension plans, which is rampant now. Like in Canada, it's bad. I'm hearing pension funds in the US and especially states like Illinois are essentially bankrupt. So I feel sorry for a lot of these people where most of their savings are in these pension funds. Are so great a concern in the US that the agency established to protect pensioners from this risk, the Pension Benefit Guarantee Corporation, faces its own financial challenges. Yield-chasing life insurers are also a prime source of potential systemic risk. Middle-class people who have been told for decades, these lies for decades, to rely on pensions are now imperiled by Fed policy as well. So this is very fascinating. I'm glad that Mises is writing about this, and you can do your own research and find other articles that talk about this. But unless you're in the stock market chasing these yields, it's going to be tough for you to fight inflation. Very tough. Now, keeping this in mind, I want to play a video here that was on YouTube from a gentleman by the name of Dan Pena. I have to warn any listeners right now, some of the language in this video is atrocious. So I apologize for that. I don't have time to blank it out. But this is from March 13th. The Billion Dollar Man. I'm not promoting this in any way, but he makes some valid points on how the people at the top, the rich, are playing this game. They understand what's happening, and now they're giving seminars for people. I think this one was free, but I believe he used to charge $10,000 or something for one of the seminars. It used to be a secret how money is created out of thin air for a long time. Now with cryptocurrencies, a lot of people, my generation and the younger generation, are starting to wake up to this scam, which is central banks. But I want to play this clip. I'm going to push mute on my mic here. And again, I apologize for the language, but you have to understand where you are. And if you're believing that by working hard, putting your money in your RSP or 401k plan is going to protect you in the future, I will come out and just say that I believe you're delusional. So we'll just take a listen here. And again, I apologize for the language.
They're giving money away free. We have the lowest interest rates in 5,000 years. The lowest interest rates in 5,000 years. You get this? The lowest interest rates in 5,000 years. What are you going to tell your children and grandchildren 25 years from now? Gee, Daddy, gee, Grandpa, what the fuck were you doing when the world changed and they were giving fucking money away? Other than have your thumb up your fucking ass. I think you go like this. It's the lowest interest rates in 5,000 years. Money is free. But
money is free. This money is free, and it's going to the top. So they're buying assets cheap. Remember, the closest you are to the spigot of free money, the more access you have to purchase assets, stocks, houses, anything to drive this market up. That's how the game works. It's very fascinating. So with this Fed and their monetary policy, stocks are only going to go higher. I know a lot of people were talking about it's going to roll over. I don't believe it, especially now that this Mueller probe thing's over in the US. It's a very good chance that Trump's going to win the next election. He's making these people rich. Now, this gentleman, I don't agree with everything he says. He makes some valid points. He also says that Bitcoin is going to zero because he knows who the creator is, and once people realize that Bitcoin will go to zero. Again, I don't believe that at all. And obviously, he doesn't understand the technology. Bitcoin is an open source protocol. The code is available for all to see. It doesn't matter who invented it. Even if it does come out, people aren't just going to mass dump it. It's open source code. It works. It's working now, and it's been working for 10 years. So you can watch this video. I'll try to put it in the description of the link. But again, the language is out of sight. So yeah, I just take a note of caution there with regards to that. So another article here is on, now this is a little dated. It does go back to 2016. But for those that think the stock market's going to roll over where you actually have a free market, I have news to tell you. There is no free market. This is a managed economy. And it's done by the rich for the rich. With easy money policy, they will do whatever it takes, politicians, to get elected. They'll promise all kinds of benefits and things for the citizens, and they have no problem putting this debt on future generations. They can't stop, because money that we experience as we use it today is an illusion. It's a Ponzi scheme. More and more debt needs to be brought into existence over and over in perpetuity to keep this system going. So this was the former head of the Federal Reserve of the United States, and Janet Yellen says that the Fed could purchase stocks and corporate bonds to help in a downturn. So again, this is a few years back, but this is from Reuters. This isn't my opinion. It's from Reuters, and this is how it starts. The Federal Reserve might be able to help the U.S. economy in a future downturn if it could buy stocks and corporate bonds, Fed Chair Yellen said on Thursday. It could be useful to be able to intervene directly in assets where the prices have a more direct link to spending decisions, she said, adding that buying equities and corporate bonds could have costs and benefits. So again, not my words, not my conspiracy, but this is what they're doing. And for those that believe this can happen, they've been doing this in Japan for, I believe it's better part of a decade or two. So in Japan, their bubble peaked in around the late 1980s. 1990, I think, was the height of their stock market. In Japan, they've been printing yen like it's going out of style, and they've been buying stocks, like directly buying stocks. So for people like, oh, the stock market's going up, it's a gauge of how healthy the economy is. Again, it is an illusion. It's not real. And your purchasing power is being eroded and eviscerated at a rapid rate. So this is from December, again, of just a few months back now, I guess 4 or 5 months ago. But the Bank of Japan's ETF buying hits yearly record. And this is what it has to say. This is from the Nikkei Asian Review. The Bank of Japan has bought a record 6 trillion yen, 52.9 billion in exchange-traded funds so far this year. So last year, as Bitcoin price was going down, central banks are printing money out of thin air to go into the market and buy stocks. And then they point and go, look, the stock market's going up. Everything is wonderful. Well, all you did was print up a bunch of money out of thin air, which now future generations have to pay back with interest. We're going further into debt, and now you're creating a bubble in stocks. It's how the system's working. It's crazy. So they probably will do it here. It's only a matter of time. And it says, providing support to a market pummeled by investors concerned about the U.S.-China trade war and economic slowdown. We're already in an economic slowdown. And the U.S.-China trade war is just a distraction, a deflection. Look over here. Don't mind the man behind the curtain of what's really happening. The Bank of Japan remains one of the few major buyers of Japanese stocks. You can't make this stuff up. The Bank of Japan, their central bank, remains one of the few major buyers of Japanese stocks. Following the exodus of foreign investors, having driven a rally through 2017, overseas investors lost their appetite for Tokyo shares. Their net selling has reached 4.5 trillion yen so far this year, yet the market remains robust, thanks to central banks buying, with the Nikkei index climbing to a 27-year high of 24,000 in October. Like, you can't make this stuff up. Like, the news is out there to see what's happening. And it's not going to end well. I don't know when, but you really need to start taking action to protect your wealth. Stop following your financial advisor. I'm not giving you financial advice. Make your own decisions and do some research. It might just save your life down the road. And so for those that don't understand that hyperinflation, stock markets actually can rise, okay? So if we look at, this is from right now, this is the Caracas Stock Exchange. And I want to show you something interesting. So for those that are aware, Venezuela has been going through a hyperinflation. I won't get into all the statistics, but basically there's paper blowing in the streets. They're just printing it like it's going out of style. But if we view this full chart for the Caracas Stock Exchange, this is on the daily. But if we look at 5 years, look at this. Just look at this chart. Like it's literally almost off the chart. And this is hyperinflation. So this starts in around 2015. And look at the stock market. So a rising stock market doesn't necessarily mean wealth for the middle class and the lower classes in society. They will do whatever it takes to maintain the wealth of the rich. That's what this whole system's for. And like I showed you in that video with Dan Pena, money is free. Basically right now, money is free. It's the lowest interest rates in 5,000 years. The system's designed to keep the rich wealthy. They won't lose assets. They take that cheap paper and they buy anything that's not nailed down that might be worth something. That's how you get rich. You don't put your faith in paper. But here you go. Like it's just, look at this. Since 2018, this is the Caracas Stock Exchange. And it continues up. It'll go up until they get sound money again. It's crazy. Just crazy. So I also wanted to get in here. This is a podcast that was done by Greg Hunter. Jim Rickards here, he's written several books on gold, and I want to touch upon some key points. So a lot of gold bugs, Jim Rickards in particular is one of them that doesn't believe Bitcoin has value and can't be compared to gold. Well, I disagree with that tremendously, even though I do believe that gold has value. The hydro goes out, etc. That's all fine and dandy. Bitcoin maybe won't be as useful. But how are you going to trade your gold anyway? So if there's no hydro, or even if you have cash, how are you going to pay for anything if there's no hydro? Gas pumps don't work. And even if you had a tremendous amount of gold sitting on a stockpile somewhere, there's going to be no markets to determine that value of gold. Are you going to pay one ounce gold coin for a chicken because you're hungry? Your farmer, whoever has that chicken, isn't going to care. He just knows, how do you say, well, this used to be worth $1,400 US before the collapse. How are you going to value this currency of gold? It's going to be very tricky. I'm not saying it has no value, but it's very fascinating. So in this clip, I just wanted to play this because it's fascinating how, for those that are in cryptocurrencies, understand the relationship between Bitcoin and gold and how Bitcoin is a store of value. In a lot of ways, it has more properties than gold because you can transact peer-to-peer instantly, permissionless, without a need of a middleman. It's unconfiscatable as well. So in this particular clip, I wanted to play it because one of the biggest gold bugs out there is admitting that gold can't be confiscated. So I'm just going to play push mute here, and we'll have a listen.
In Zurich, Switzerland. It's a global firm, but I happen to be meeting with their head of precious metals in Zurich, and he told me that they cannot build new space fast enough.
Wow.
They're acquiring, the Swiss Army hollowed out all these mountains and built, forts and supply depots, and you look at a rock in the Alps and it might actually be plastic, and if you move it off, there's an artillery piece behind it. So the Swiss are pretty well armed, but some of these facilities they don't need, and they're selling them to, among others, vault operators who are putting up multiple security perimeters and using them as vaults. So I said, well, where's all this gold coming from? He says it's coming from the banks. In other words, it's not new output. People are moving gold out of Deutsche Bank, Credit Suisse, UBS, and the big banks, and they're moving it into private vaults. So the amount of gold is the same, but people realize if you have your gold in a bank, it's subject to government confiscation with one phone call, whereas that's not true with the private vaults. So
there you have it. Gold can be confiscated. And this is from one of the biggest gold bugs out there who, like I said, has written several books on the subject. And gold this, and gold's a great hedge. And he does make some valid points, though. Like central bank buying of gold right now is at a high it's been in about approximately 50 years. So there is a lot of gold buying coming on. But I just found it interesting how he admits that it can be confiscated so easily. And gold, if you've ever been a precious metals holder before, there's storage fees. It's tough to transport, let alone get it across borders. Can make things can be very difficult to do. Whereas Bitcoin, it's easy. It's very, very easy. Now, in this next clip, it's from the same interview with Greg Hunter. This is where he's talking about when you should buy an asset. And I found this is very relevant to today with Bitcoin, and in conjunction with my last video that I did back in February about it doesn't really matter about timing the bottom. You want to buy an asset when people hate it. I don't care what Bitcoin's going to do next week, really even next month. It's a long-term strategy. You buy things when it's a very despised asset, a lot of negativity, even though unfortunately right now, I think there is too much hype. People are believing we're going on a parabolic bull run. I'm not so sure I believe that. Long term, once we get into 2020, especially once we start approaching the halving in May 2020, this asset, Bitcoin, will definitely be higher. But in this clip, again, I'm going to push mute. Let's take a listen about when you should purchase an asset. It's very fascinating. Just hold on.
And that was Greenspan, in my view, operating a shadow gold standard that was never admitted. But anyway, in 1999, the second bull market began. It ran until 2011. It went up over 700%. And then we had a bear market from 2011 to 2015. And it fell 50% from the $200 base in 99. So it went from $1,900 an ounce to $1,050 an ounce in December 2015, which if you use $200 as a baseline, not zero, but 200, that's a 50% decline. And then the new bull market began in December 2015 at $1,050 an ounce. Today it's over $1,300 an ounce. So that's close to a 30% gain so far in that bull market, which is about 3.5 years old. The problem, Greg, is that gold holders, gold investors, gold bugs, whatever you want to call people, they're so discouraged. They're so beaten down. They're so tired of waiting. They're so, they've just had enough. They can't believe it. Because of the length of the bear market from 2011 to 2015, or, heaven help you, if you bought it at $1,900 an ounce, you're down a lot, and it's been a very long wait. But that's exactly the time when you should buy. It's when sentiment is awful, everyone's discouraged, people hate it. That's the time to buy. Those are the lows. This is very contrary to human psychology. People always buy high and sell low, which is a wonderful way to lose money. But if you want to make money, you got to buy low, and at some point.
So I thought that was interesting. That's when you buy an asset. So we go back and we look at these charts. This is when you want to buy an asset. When everyone's hating it, it's going through free fall. 80% off to me is fantastic. So it was nice to buy some more dips down here. I am anticipating to maybe buy once we roll over. That'll probably be my last one for the rest of the year. It depends on the market. But for those of you that maybe don't have a lot of skin in the game, and I'm not a financial advisor, I'm not giving you advice, but you could just dollar cost average. Just set a portion aside every week or every 2 weeks, monthly if you'd like, and just buy. And just keep buying here, buy a week here, 2 weeks here, and just keep buying it. If we do go below 3,000, I believe there's going to be a lot of people sitting on the sidelines, and we'll scoop it all up. I've made some preparations that in case it does, I will buy more. And in fact, when situations like this occur, especially in Bitcoin, I get more excited about as it's falling than I do when the price is rising. If things start to go parabolic and rise too quick, I get a little bit nervous. But when things are going down like this, I get very excited because I'm getting things on the cheap. I think I have one more clip here on this Greg Hunter episode. Yeah, this is an interesting one. In this particular topic here, he's discussing how gold just sits there, like it's money, it's the best store value, etc., etc. But it just sits there, just collects dust. So while a lot of people bash with Bitcoin, it uses too much electricity, these sorts of things, what I find fascinating is what does gold do? So you get a bunch of gold, and again, I know it does have value. You stick it in a vault and it just sits there. It just sits there and collects dust. That's all it does. It just sits there and collects dust. So I'm going to play this clip. I believe it starts off at, where is it here? 3402. But it's a real good listen.
You do want to go on a gold standard, you're going to have to start at 10,000, maybe higher.
What about silver? Silver. I always ask the silver investor. We talk about gold a lot. Silver. Jim Sinclair says that silver is going to be gold on steroids. It's going to go absolutely crazy. Other people have said, yeah, they've been suppressing it so much. I mean, we're at mining costs. It's going to go way higher in terms of percentage basis. What do you say about silver?
Yeah, look, I'm not anti-silver. I invest in silver. I think silver will tag along with gold. I don't think it's gold on steroids. I follow. Follow. Yeah, every now and then I look at some of the the silver conspiracy theorists, the people who say, J.P. Morgan's got, a zillion tons in their basement and they're suppressing the price. I mean, I think a lot of these people don't really understand how these commodity markets work. You can't just look at the COMEX report and think that how much silver somebody has, because you don't know. They could be short in derivatives markets that are non-transparent. They could have silver swap agreements. They could have forward sales. They don't have to be acting for their own account. They could be acting for the account of customers, and they could have physical silver someplace. You have so many elements that go into it, most of which you don't know. They're non-transparent, that I would be hesitant to, kind of project these silly silver prices. Having said that, I'll say, by the way, the other difficulty in analyzing silver that you don't have in gold is that silver is an industrial commodity. It's used in tons of things, automobiles and, electronic applications, and, it's alloyed. It's just used in a lot of things. Gold isn't. People talk about the industrial uses of gold, and you look into that, and you find out you're talking about jewelry. Well, there's no difference between jewelry and bullion. I mean, jewelry is wearable wealth, and bullion, you put it in a safe place, but there's still forms of wealth preservation. So gold actually has almost no uses except money, and it's the best form of money. So gold has a role. It's called money. It's money. It doesn't have to do anything else, but it makes it easier to analyze because.
So there you heard right from Mr. Gold himself. It doesn't need to do anything. It just needs to sit there. Bitcoin, on the other hand, it's peer-to-peer. And that's what's so beautiful about Bitcoin and crypto assets, but particularly Bitcoin. It's like walking around with your own vault. And if you share you share your public key with them, as long as you own your own private key, they can teleport money into your vault. It's beautiful, beautiful, beautiful technology. So keeping these things in mind, never-ending money printing, easy money, money's practically free, lowest interest rates in 5,000 years. Gold is money, but it can just sit there. It can be confiscated. And we've seen what happens like what's happening in Venezuela. Just because your stock market is going straight up doesn't mean that it's a sign of the economy is doing well. Venezuela is going through a massive hyperinflation. I'm not saying or suggesting that a hyperinflation is going to occur here in the next 2 months, but it's just going to be, I believe it's just going to be a slow decline, just going to be an erosion of wealth. The middle class will just continue to perpetually get poor. And now with AI and robotics, more jobs are going to be displaced. It's going to be most likely a not very pleasant 20-year cycle. And I just want to end this video. I don't want to make it too long. What else is driving the stock market higher? And I've said this in my last video. I believe the stock market is going higher, and it will continue to go higher right up until past the election of Donald Trump, probably for the second term, because the rich want to get richer and preserve their wealth. So Trump's doing a good job making them richer, and good chance we're going to see the largest transfer of wealth yet. We thought the 2008 financial crisis was bad, But under Trump and this never-ending money, easy policy, stocks must go higher at all costs. The rich are going to love them, and they're going to put their money behind a president that's going to keep them rich. This is from MarketWatch, beginning of this month, April 9th to be exact. The title is, If This Relentless Bid Dries Up, Investors Could Face Gruesome Nightmare. This is talking about corporate buybacks, companies buying back their own shares, not as an investment vehicle, but just to drive the prices up, because a lot of these CEOs and whatnot get paid in the value of their stock. It doesn't matter about fundamentals. They're not putting that money, funneling that money into research and development or hiring sprees. They're just driving the prices up. And this is just the rich getting richer again. So one of it says here, but what happens to these shares and the rest of the investment landscape when it stops? And they're talking about stock buybacks. And right now we're at a record. We're just at a record pace. And this is the response. Too painful to even imagine. Share buybacks are the relentless bid, buying at any price, buying not to acquire assets at a low price, like we discussed with gold, Bitcoin, and others, but buying with the specific purpose of pushing up prices. Like, look at this chart. Like, this is insane. 2012, and look at 2018. Like, and 2019 will probably be even higher. Like, this is the trend that we're in. Whether you don't want to believe it, this is the reality. Please do your own research. Find out what's going on. I wouldn't short the stock market yet. I believe it's going higher, and it's going higher. And to suggest that Bitcoin is going to continue to plummet down, or gold is going to plummet down, gold is not going to go down. I don't believe it. Maybe short term, but not for long. Central banks are buying it like it's going out of style. China, Russia, there's several countries in Europe that want to repatriate their gold from the US. It's part of Basel III. Basel III Accord, which was done back in 2015, I think, but is all central banks are going to need to allocate so much gold in their reserve to please the BIS, the Bank for International Settlements. But I don't want to make this video too long, but please, people, go out, do your own research, make your best decisions as you can. Long term, Bitcoin is only going to do well. We are going to probably retrace a bit as we roll into summertime. That's my opinion. If it does go parabolic, well, then I'll have to change my position. But as it stands right now, I believe we'll roll down. We'll probably come touch the 200 weekly again. Best advice, if you don't have any, maybe dollar cost average. If you think that's something that you should be doing, talk to a financial advisor. Don't take my word for it, and hold on, because the end of this year, I think you're going to be quite surprised and quite impressed if you're to dollar cost average. If you have been, or you continue up until summertime, I think you'll be well rewarded as we get into 2020. So thanks for watching this video. I'll try to do another one in another month or so. I'm not really here to produce a big YouTube channel. I have other things that occupy my time, but I'll do my best to come back and keep you updated. And with that, take care. Happy Easter. Until next time. Cheers.